Why are commodity supply routes vulnerable to geopolitics? Imagine a world where a single political event can cause a ripple effect across global markets. That's the reality for many commodity supply routes today. These routes are like the veins of the world's economy, carrying vital resources from one place to another. But they are also fragile and sensitive to political changes. Most commodities like oil, natural gas, minerals, and agricultural products travel through a handful of key pathways. Think of the Suez Canal in Egypt or the Panama Canal in Central America. These narrow channels are crucial for moving large quantities of goods efficiently. When tensions rise in these regions, shipping companies face tough choices. They might have to reroute ships around longer paths, which increases fuel costs and delivery times. These delays can cause prices to jump suddenly. Geopolitical conflicts such as military clashes or political unrest can directly damage infrastructure. For example, if a conflict breaks out near a resource-rich region, production might halt. This reduces supply and can lead to sharp price increases. Countries also use trade policies as tools of influence. They might impose tariffs, quotas, or export bans on critical raw materials. These restrictions can create shortages and bottlenecks, especially for items like rare minerals used in technology or renewable energy. Sanctions and export controls add another layer of risk. When a country faces sanctions, it can block exports of key commodities. This can fragment global supply chains and make certain resources scarce. For investors, such disruptions mean commodity prices can swing wildly based on news of conflicts or policy changes. Sudden restrictions can push prices higher very quickly, especially for energy sources like oil and natural gas. Political instability and armed conflicts can also damage transportation infrastructure. Roads, ports, and rail lines may be destroyed or become unsafe to use. When this happens, shipments stop, and supply chains are interrupted. These disruptions can cause ripple effects like inflation, food shortages, and social unrest, which further impact demand and supply. Long-term shifts in geopolitics are also changing how supply routes are viewed. Countries are increasingly focusing on regionalized supply chains and reshoring production to reduce reliance on distant routes. This can change demand patterns for certain commodities over time. For those investing in commodities, understanding these geopolitical risks is essential. News about conflicts or sanctions can cause rapid price changes. Monitoring political developments and supply chain vulnerabilities helps investors decide when to buy or sell. It also guides decisions on diversifying holdings or using hedging strategies to manage risk. In the end, commodity supply routes are vulnerable because they depend on a few critical transit points and stable international relations. When these are threatened, supply reliability drops, costs rise, and markets react quickly. Recognizing these risks helps investors stay prepared and make smarter decisions in a complex global environment.